Welcome back to Tech Talks. Today we've got Peter George, who is the owner and founder of the first AI hedge fund in Canada. Peter, thank you so much for joining us today.
Thanks, Chris. Nice to be here.
Tell us, first of all, let's backtrack. Let's start with hedge funds. What are hedge funds? For people who are not invested in the market, not that, are not that in tune with this, what is a hedge fund?
Hedge funds are intuitively very sophisticated instruments where institutions will come in and invest money with an asset manager, a money manager, and they can hedge in the traditional sense of hedging, but there's a performance fee that's factored in. So if you perform well, we would earn a performance fee.
Mm-hmm. Okay, and what is hedging?
Hedging is if you were to use leverage in the fund.
In the 90s, I did my master's thesis on a social science application of complexity theory. And one of the people who supported me through that was another friend who was doing his PhD in mathematics. When he graduated, he started working for a bank. And this is, mid to late 90s at the time. He had 3 computer screens going at any one time. He's watching all this information come in, market information, news information, and he's telling the bank where to invest. Is that basically what AI is doing? Is it replacing what he was doing?
So we would have taken your friend's theories that he has, and then we would have coded them through machine learning, and then we would use a strategy. So your friend was probably thinking, 3 levels deep, if you will, but with machine learning and the power of computing, you can go deeper than that. So we would take his theory and turn it into software.
Okay, so give me an example of what those different levels would be. So what would be a first level or second level, third level deep be?
Well, it's the complexity of the mind at the end of the day, right? The ability to think on different levels, where a computer, just with the power of computing, can think deeper and farther.
Like at the beginning of the pandemic, I was thinking, I should really invest in Purell and Zoom, because it just seemed to make a lot of sense. Everybody was starting to sanitize their hands and everybody was starting to use Zoom. Is that a first level sort of assessment of the market?
I think that's an accurate statement. Is again, you take the fundamentals of what makes you pick that stock in your estimation with the pandemic happening. Purell was a logical thing to invest in, but then you need to go deeper of the fundamentals of the company.
Right. Okay. And so the AI, is it assessing the fundamental, like the financial statements from the companies?
It factors that, it factors momentum, it factors historical pricing, it factors management of the company, it factors quite a few things.
Okay. Okay. And you also mentioned that yours is the first company that's doing end-to-end AI.
Correct.
Can you explain the difference?
Sure. So there's quite a few asset managers in the marketplace, both in Canada and the United States and around the world, that will use AI. They'll use a satellite imaging for parking lots, for inventory of cars. There'll be housing, same things. Toll Brothers is a publicly traded company in the United States. But then all that data will be taken by an asset manager, a portfolio manager, and he or she will assess it, and then they'll make their decision based on that. And then whether the pick is going right or the pick is going wrong, ultimately will be that asset manager, that portfolio manager, whether they sell or they buy more.
Okay, so I've heard, yesterday I did an interview with some venture capital funds, and one of them is actually investing in a company that's developing smart stoplights. So, they'll increase traffic flow, but they're also measuring the traffic flow. Would that kind of traffic flow, would that be some data that the AI may be looking at in order to determine?
100%. That traffic, this is the first I hear of it, but that traffic light will measure, and then it'll do its own monitoring and machine learning, and it'll begin to learn patterns and trends. And then it'll factor that in the future of does this light need to stay red for 3 minutes, 10 minutes, whatever the timing is. And then through machine learning and the algorithms, it will then learn from itself. And that's what machine learning is. That's what AI is. It constantly evolves. It could be static, where it stays the same, or it'll continually learn and improve on those patterns.
Traffic flows into the financial district have, diminished greatly through the pandemic. We're back up to maybe 20-30%. Would it measure the traffic flow coming into the financial district and see what impacts that's having on markets? Is that a
100%.
possibility? Yeah.
100% it will, but it'll learn from itself. So as time progresses
Mhm.
and we go forward, it'll know from the previous traffic patterns of what the future traffic patterns will be.
How has the performance been for your hedge fund?
Last year was a difficult year for us. There's no doubt about it. But the year prior to that, in 2020 and 2019, respectively, we were ranked #1 for our particular fund that we were managing, a market neutral fund where we have long and shorts. We were ranked #1 in the world in the previous year to that. We're ranked #3.
Mhm. And how's the performance this year so far?
This year so far, we're up in 2022, but there's still a lot of there's still a lot of time left. We're only in February.
I'm interested also though in hedge funds and in the stock market. Like the stock market from a very broad sense makes sense to me, because if you're a company and you need to expand, you need new machinery, or you want to expand into a new market, you need some financing to do that. You go to the stock market, you release some stocks, you get that funding that you need. But then there's all this longs and shorts and options and all these different financial tools that are developed, that are traded. Are those financial tools actually adding value to the economy?
It adds, it's good and bad. It's both ways, because if you use GameStop and AMC theaters as the examples, hedge funds shorted those stocks because their fundamentals indicated that they're poor performing. And obviously, if you short something and it goes down, you make money as the investor in that. But with Robinhood and all the other types of investors that are out there, they felt differently, and they actually moved the market in the opposite direction.
So there's this conflict going on. It's a bit of a battle out there.
Yeah. Again, stock markets provide liquidity for companies, right?
Right. Let me ask you one more question about AI before we go. Elon Musk says AI is actually quite dangerous because it could ultimately replace humans. Do you get the sense of that? Is that a potential danger that the machines will actually take over?
I
And
think
I know this is kind of a sci-fi question.
that is. I think anything's possible at the end of the day, but we're not near that anytime soon. So.
Yeah. Okay. Well, Peter, thank you so much for being here. It's a pleasure, and it's been really interesting to learn about this AI hedge fund that you run.
Thanks for having me, and look forward to talking more.
Thank you for watching. Don't forget to follow me on social media, and we'll see you next week for more Tech Talks.